Hey guys, what's up? This is Andrew for TRENDLINES.com. So as you can see, I'm not in Hong Kong anymore. I'm right now on holidays. I'm in Chambéry. So this is my hometown in France. And as promised, guys, I'm taking some time for you even during my holidays to make an update on AMC. So let's get into it. So guys, as usual, I'm going to start on the first time frame. I'm going to remind you quickly what I was saying in my previous video. I'm going to try to make this one quick just to sum up the information. Basically, I did my last video using Thursday's close, and so I'm missing Friday and Monday session. So I'm going to update you guys with what happened during those 2 days, and you're going to see that we have some very interesting information. So let's sum up very quickly the situation here. We take a step back as usual, guys. So here AMC went from 10 guys to 73. So this is my third wave. And as you know, guys, I'm using ELLIOTT wave theory. That is saying that moves up, develop in 5 waves. So this is a 3, very obvious. Before we had a 1, 2, 3. We are doing a 4 and the 5th is coming. So here, what I wanted to show you guys first in my previous video, I showed you that we can make discounting in 2 different ways. So I'm not sure exactly which one I'm going to keep. I like this one because here I can break down this price action into 5 waves quite clearly inside my triangle. Here I'm having my 52 breakout level that has been retested once, twice, 3 times, and guys, very important, we didn't retest it on Friday's session. Even if the market was bearish, AMC lost something like 5%. I was in the plane, I was looking at the chart, I was looking, guys, at everything that you were saying on my Discord. By the way, guys, thank you very much for making it active. It's very interesting to read at everything that you guys have to say on AMC. And I'm going to be more active on it. I'm going to try to give you more color, more updates, more, everything about AMC, about GME, about everything else that you guys are interested in the market. So just when I'm going to be back from holidays, but basically what is interesting, guys, here that I wanted to show you, either we do this scenario like I had. So let me show you quickly. The alternative scenario, guys, is that we are still in the triangle, right? So it's like this has not started yet. No, actually, bam. So it's going to start here, okay? And this is just a triangle. So this is the alternative scenario. That is not changing much, but here I struggle to actually count 5 waves inside of it, but sometimes triangles have 7 or 9 waves, so it's possible as well. This scenario is good as well to use, but here you can see that it's not fitting perfectly on the downside. The lower band is not retested very clearly. If it was a triangle, why we didn't go to 47, 48? You see, because I think that this triangle is not what is playing out. I think that the triangle was here, and that's, I'm going to go back to my previous counting. That was giving me once again a very nice breakout level at 52 that has been retested once, twice, and not a third time. So this is the information that we're having basically in 2 days. Nothing much happened, guys. I can see that, you're asking yourself, is there any update? What do you think about today's price action? So nothing has changed. 61, 64 are the levels to break out. 61 because here we have this trend line. When you have this kind of trend lines, guys, they are very important. If the triangle is here or not, if it's the upper band of my triangle. Anyways, guys, when you have a trend line like this, if we break that, this is a very important level. So it's right now at, let me make it perfect. It's even lower. It's around 60, 61. And this would be the third wave of my 5ths. 1, 2, 3, and inside the 3, 1, 2, 3. So the third looks like it is extended. So 61 is the level to watch. What you guys want to see is something like this. Bam, bam, bam. We break out, we retest. If here we have strong volumes, this is confirming that 61 is the level to watch. I told you that 64 is the level to watch. They are both levels to watch. 64, I'm keeping an eye on this one, because it would mean if we break 64 that even if here we're having a complex correction, let me show you guys again what are those complex corrections. So here double and triple threes. So in the ELLIOTT wave book that you can find on Google, written by Frost and Prester, at the page 30, guys, have a look at that. ELLIOTT called sideways combinations of corrective patterns, double threes and triple threes, which are actually the usual corrective patterns that we see right now, W, X, Y. where W, X, and Y are zigzag, flat, or triangles. And if this is the case, which is possible, guys, which is possible, then if we trade above 64, which is the top of wave B here in my ABC, it would mean that this whole complex correction is over. Right now, I'm not sure. Maybe it's something that is a bit longer in time. Maybe here we have an ABC. Maybe the C wave is like this. I can't be sure right now. But what I know is that if we trade above 64, this is off the table, all right? So what are our different scenarios? Now here, first, the information I wanted to give you guys, very, very important. That happened on Friday. We had some very, very precious information here. Look what I want to show you guys. Market making higher lows in a bearish environment. So the MACD is doing what, guys? The MACD on the 4-hour time frame is making lower lows because we are correcting still. We are maybe still in this fourth wave, and if we're not, we're in the second wave of the fifth wave. So in both cases, we are in a corrective environment on the short term, on the hourly or 4-hour time frame, but still the market is making higher lows because there are so many investors, so many buyers that are more aggressive than just sitting at the 52 level. The right trade to do right now, as I told you guys in my previous video, is to build up some long position, buying the 51, 52, 53 levels. If you are a scalper, you can use a stop loss around like 50, something like this. Because if we break 51, what would happen is that here we would probably have a flat, all right? This is the alternative scenario that we're having here, a big flat, all right? Something like this. This is possible as well if we break 52. But guys, we are having a bullish hidden divergence. It's this one. Let me show you again. This one, guys, bullish hidden divergence when you are in a corrective environment, when the market is, correcting. Usually the MACD is going lower, the RSI is going lower, the stochastic is going lower. Basically, we're losing momentum, but the market is actually not able to make a new low. This is a bullish hidden divergence, all right? It's this one, market making higher lows when the MACD is going lower. This is telling us that the bulls are in control, guys, in a bear environment. So this is what we just had on Friday. So this is confirming that actually bulls are in control in this fourth wave. And it's confirming that the fifth wave is coming, guys. Once again, I like to count who won how many battle, all right? And here we were like, after the third wave, I count here the days, it was 9-7 for the bears. Now it's like, the bears won one day, the bulls won another day. So we are back at the same level, but we are having a bullish hidden divergence for us on top of what we had before. It's now 10-8 for the bears, but look at the volumes, guys. Who won the most important day? Who lost money here? The bears lost money. We came back at the same level, but more trades were done during Monday's session. So it means that bears, it's 10-8, but it's, the bears lost money in the past 2 days because once again, the days with the more volumes are won by the bulls. And this is good. And we're having a bullish hidden divergence on top of that. So guys, nothing much to say apart of that. I'm confirming that the fifth wave is coming. I give it maybe, one more week, guys, one more week, because then either we break 52 and then we do an ABC, it would take maybe 2 or 3 more weeks. But if we don't break 52 on the downside, then we need to break on the upside the 61 level, and probably the 64 level is going to be the domino effect that we saw before. Stop losses of bears are going to be in this area around the 61, 64 level. Then they're going to retreat, guys, because they know they're losing, they know they're getting hammered, and they're going to just pull back the orders at safer levels. They're still going to be there, guys. They're still going to be there. They're still going to accumulate some short positions, and they're still going to lose money. I believe that. So guys, that's it for me. I just made it short, I just wanted to sum up the situation of what happened in the past 2 days. And once again, we came back to the same level, but with more confidence. So this is looking very good for me. So I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button, so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.